everybody, welcome back. It's Mike, your host of Multifamily Unplugged, and it's Saturday morning. And you know what I say every week, if you're the only one watching this, go wake somebody up right now. Stick a cup of coffee in their hand and get them here, because we're going to have some raw, unedited conversation this morning. I'm joined today by Hunter Thompson. Hunter, you want to say hi real quick?
How's it going? Thanks again for the opportunity. Much appreciated.
Yeah, glad that you're here for sure. And we're going to get into that in a minute. But, one thing I talk to you about every week and on every one of my episodes is, what are your intentions? Are you being intentional about what you want to accomplish today, about what you want to accomplish in your business? What are you working on to scale your business? Is it you're getting better at underwriting? Is it you're getting better at capital raising and networking and building relationships with people? Well, we're going to talk about a lot of that today. So I'm glad that you're here. Like I said, go tell somebody, wake them up. And as always, we ask you, if you like the content, please subscribe to our YouTube channel, like us, love us, follow us on social media, because you're going to get relevant content all the time. So let me introduce Hunter. Hunter Thompson is a full-time real estate investor and the founder of ASEAM Capital. Since founding ASEAM, I can't talk this morning, guys, Hunter has helped more than 400 real estate investors acquire over 150 million of mobile home parks, self-storage, retail, office, ATM machines, and cryptocurrency assets. Hunter's also the host of Cash Flow Connections real estate podcast, which has received over 1 million downloads. He also wrote the book, Raising Capital for Real Estate, which hit #1 on Amazon in real estate sales and selling. Hunter, I am awesomely glad that you are here this morning. Welcome to the show.
Hey, thanks again for the opportunity.
Yeah, I appreciate it. And, I watch you all the time on social media. I hear about your stuff and your courses, and, I'm intrigued. You're definitely out there tearing it up and teaching people what I like to say, the right way, the best ways of raising capital. And I really want to get in and dive into that. I'll tell you a couple of my past stories, which are kind of interesting. But, Hunter, one thing I always ask people right in the beginning is, in one word, what best describes you personally and professionally?
It's tough. One word. I mean, I got to say, it's hard to put into one word, but I think entrepreneurial. I have a lot going on in my life outside of my business, but I just pursue things with an entrepreneurial spirit. So I'll have to go with that.
Okay, good. So I'm ready to dig into that a little bit and find out what else you got going on outside of what you do for a living. So, hey, how about a little background on you? Where, how'd you get in this business? How long? What'd you do before?
Yeah. So, I always just was the reason I say entrepreneurial is I was the kind of person that I really wasn't hireable. In college, especially, I was always trying to do anything like side hustles. I have a background playing poker at a pretty high level during the poker boom. And then when the real estate crash happened in 2008, I was just very well positioned because I wasn't in the world of finance. And when 2008 happened, I was obsessed with economics and still am today, and recognized there were some data points that just from a historical standpoint just looked very, very compelling. And so I went all in on finance, generally speaking, and I wanted to learn about stocks and bonds and international investing and real estate and private equity and venture capital. I just started with the things that most people are most familiar with, the stock market. And so starting 2008, looking up to Warren Buffett, Charlie Munger, reading these things. And it really wasn't until 2010 that I had this moment that almost no one talks about, by the way. 2010 isn't a moment that most people care about. But for me, it was like I had gone all in on the stock market, emotionally, educationally, et cetera, and also investing. And basically, all of a sudden, the European debt crisis happens, which all this studying I had done of economics generally, but also, just discussions around diversification and tech stock versus growth stocks and all these things. And then all of that was useless compared to everyone focusing on the European debt bonds, particularly the German and Greece debt bonds bond yields, I should say. And so I remember watching CNBC, and all of a sudden everyone was focused on Greece bond yields. And I'm like, I've studied this for 2 years. never did it come up that something as obscure and ridiculous as the Greece or German bond yields play a huge role in my financial portfolio. I've got to figure out a way to get out of this casino slash nightmare. And that's kind of what led us to where we are today, 12 years later.
Yeah, interesting. Is the poker boom over?
Definitely. And I can give you some data to back that up, but let me just break it down briefly in terms of what I'm referring to there. I believe it was in 2003. There was a person who's a CPA, lived about 3.5 hours away from Memphis, which is where I'm from, entered into a tournament, which was a $17 tournament. He won that tournament, which got him into a $200 tournament. He won that tournament, which got him into a tournament that cost $10,000 to enter. It's called the main event, or the World Series main event. And he won that tournament and won $1 million. Wow. And to add gasoline to the fire, his legal name was Chris Moneymaker. And so it created a multi-billion-dollar boom in the poker industry because everyone thought, like I did at the time, that you could make $1 million if you're just a random person. And it ended up kind of being the case because so much money flooded into poker. If you took it seriously, if you read the books, if you got a coach, all of which I did, I was able to have some 10, 20, 30K months consistently. And I thought, wow, I didn't understand market cycles. I didn't understand that we were in a bubble. I just thought I was the richest man and the best person in the world. And then eventually what ended up happening, combination of things, one of which was that the United States government made it illegal to play online. And it basically froze the games up and dried them up eventually. And now, by the way, the poker boom is over because the games are very difficult to now because of the world of online learning, which at the time, 2004 and 5, YouTube existed, but the first thing, if you wanted to learn something, most people didn't think I should Google it. I know it's weird to say now, but it just wasn't the case. But now, if everyone has basically solved the game, it changes the dynamic of the space. It's very different, by the way, than real estate, because the more interest into real estate, it doesn't make it harder. It makes it potentially more lucrative and really protects the downside. So that's a little about my background and kind of the difference between the real estate boom and the poker boom.
Though, what you just mentioned, though, about more people being interested in real estate, it makes it more lucrative. That's one of those core fundamentals of the industry that makes it, I think, intriguing, not just for somebody who's been in the business for a number of years, but for the average guy coming in, going, there is all of this opportunity. All I need to do is just push the envelope forward.
Totally. And especially when you look at the economic situation right now, there's some concerns in the marketplace, which I'd love to talk to your audience about, because I think it's what a lot of people are interested in. But I am very bullish about this space right now. I think this might be one of the most exciting times to get into real estate. And I know, looking at the prices, there's some skepticism of that claim, but I've got some data to back that claim up. So it's a really—
So go ahead, run with that a little bit, because I do want to talk about the market a little bit, right? Because I think that's a looming factor on everybody's mind right now. Hey, you went through 2008. I've been through 2008. I went through 2001. And 97. Okay, so what's happening now? What are the fundamentals? Are they out of whack, or is this a good time, like you say?
So anytime we look at economic data, no circumstance is the same as it was previously. It's always the case that things are changing. There's incredibly complicated factors at play. However, there's a couple things that I see as being very favorable for real estate investors, and they're macro trends that I think are basically inarguable. Before we get into that, though, let's just talk about why this is important. I mean, just recently, there's been a lot of discussion around the inversion of the yield curve. And what that refers to is the fact that short-term bond yields, 2-year bond yields, are actually higher, or briefly were higher, than longer-term, specifically 10-year yields. And that is a very rare occurrence. As an investor, obviously, if you're going to take on the risk of a 10-year investment, certainly you should have a higher return than those of short term. And that's not what happened. For a brief moment that took place, and this is usually like 80%, 90% plus over the last 50 years, a sign that there's going to be a recession typically between 18 and 22 months from the time that it happens. Now, there's obviously discussion every time there's some kind of economic indicator. There's always a lot of rumblings around this time it's different. And I'm not necessarily going to take that position. I'm going to take the position that the economic data is such that recessions are not typically tied to corrections in real estate, especially not significant corrections. All of us remember intimately what happened in 2008, but that is the aberration, not the norm. And I personally think that if we do have a recession, which I'm not 100% sure that there will be one in the next 24 months, but if we do, I think the potential slowdown of this massive increase in prices that's taking place in real estate, I think that it may be reduced slightly. The increase will be reduced, but not the prices themselves. And that's because of a lot of things we can talk about today, but that's kind of generally my stance.
So let me ask you a question. You just indicated that you don't think that there's going to be a recession. And I just want to ask this, in this way, don't we have to have one to reset?
Yes, there could certainly be a recession. And I'm actually not really making the claim that there won't be one. It's more that this Pandora's box that took place in 2008 of serious quantitative easing and money printing, that box is opened now. And I think that the Federal Reserve and other central banks all around the world have made it clear that if the market has a sneeze or a virus or the potential for a virus, that they're going to smash the multi-trillion-dollar button. And that button is very favorable for real estate owners, not consumers necessarily or renters, but owners. And I'll give you some data for that. So in the last 2 years, central governments in the world printed accumulation of somewhere in the range of 10 trillion with a T dollars.
That's a central bank?
That's correct. So the Federal Reserve around 6 trillion and the rest of the governments in the world around 4 trillion.
Okay.
That creates a massive tsunami of liquidity searching for yield. And the first place those dollars go to are the bond market, because that's the only real place you can place trillions of dollars. But quickly, obviously, bond prices and yields are inversely correlated. So the more people that go into bonds, the lower the bond yields are. And so it becomes less and less desirable. And so those trillions of dollars are looking for other risk-adjusted returns. And having studied this and have talked to some very qualified people on my podcast and otherwise, United States real estate is some of the most favorable risk-adjusted places to park money in the world. I, as an American, I take it for granted, like the nature of the legal system, the supply and demand imbalance, the housing crisis in terms of lack of supply and crazy demand. And I see this massive tsunami of liquidity ready to crash in United States real estate. And we as owners, operators, are well positioned to take advantage of that. So that's one piece. And by the way, I should mention, I just recorded 22 interviews about this topic. This is the summit that I just did. You can check it out at 100k2invest.com, where we have economists, sponsors of different asset classes, all talking about this exact topic. What's going to happen when this $1 trillion wave crashes? Are we going to be able to surf it, or are we going to be on the side, talking about the time that we missed that massive opportunity?
Are you ready to skyrocket your multifamily business and see real results in your investing activities? I'm looking for 5 highly motivated individuals who are serious about taking their real estate business to the next level. If you are ready to become a better version of yourself and are sick and tired of wasting time and are ready to explode to the next level, then apply today and see if you qualify for my personal one-on-one coaching and mentoring. Log on to My Core Intentions and schedule a call for a free consultation. Throw this back at you and ask you, do we want them to be printing money like this? Because obviously you said it brings liquidity into the marketplace. And yes, we want liquidity in the marketplace, but yeah, we got hyperinflation starting.
Really good question. And we got to talk about what they should do, what they are doing, and what it means as an investor. So I'm a proponent of the Austrian School of Economics. I am very much sympathetic to completely dissolving the federal government and the Federal Reserve and all that stuff. I mean, I don't think any of that is needed, and it's not good, and it's not moral and any of that. However, as I have gotten older, I realize that my ability to control those entities and what they do is very, very small. I can speak out against it, and I frequently do, but the reality is they are in control, and the central banks do exist. And if we're going to play the rich get richer and the poor get poorer game, I'm certainly not going to be on the losing side of that. So no, I don't want central banks to print money. I don't want them to do anything. I want them to be completely dissolved.
Yeah.
However, when you touch on inflation, let's talk about that really quickly, because that's what happens when money is printed to a large degree. And from the Austrian definition of inflation, it is basically an increase in the money supply without there being a proportional increase in the goods. So the actual price is not really relevant to what inflation means, at least from the Austrian school. Now, some other people would say that prices increasing is inflation, and I'm not going to go too far down the rabbit hole, but just bear with me for a second. Let's say that a price for an apple is $8, and then there's a massive recession, and so the Fed prints $1 trillion bajillion dollars, and the price of an apple actually stays the same. Does that mean that there was no inflation? Some people would say that is the case because the price of an apple stayed the same. I would make the argument that the inflation is not reflected in the price. Perhaps the price of the apple should have dropped by 40%, but the government printed so much money that the apple price stayed the same. Does that make sense?
Yeah. Okay.
So when inflation happens, as real estate investors, there's two really important things that take place. One of which is that top line increases disproportionately to bottom line. Meaning that if inflation is consistent across the board, meaning that all goods and services increase, which doesn't happen, but just bear with me for the purposes of the argument or discussion. If you have rental rates, which are increasing at 6% per year, not because of supply and demand or you implementing the business plan, but just because of the nature of inflation, you would anticipate that your expenses would also increase at 6% per year, because it's about a 1-to-1 ratio, the cost of labor, blah, blah, blah. But the issue is that most investment opportunities don't have a 50-50 operating expense ratio. Most investment opportunities, like self-storage in particular, you can have sub 30% operating expense ratios. So what does that mean? Rental rates are increasing by 6%, let's say, as inflation takes place. Your expenses are increasing at 6%, but the ratio of expenses to gross income is not 1-to-1. Yeah. So you are on the receiving end of the net, which is much more weighted towards, positive NOI than it is expenses. Does that make sense before I move to the second piece?
No, yeah, absolutely.
So as real estate property owners, inflation isn't, I'll put it this way. Real estate is not simply a hedge against inflation. Inflation is a massive tailwind to real estate, especially if you're focused on NOI because of that. But I think people can figure that out pretty quickly. And there's a lot of people talking about that. But there's another piece of this that far fewer people talk about, which I think is even more compelling. Currently, there's a lot of discussion around rates. And are interest rates going to rise? And maybe we were buying properties at 3%. What if it goes to 4%? How does that change the dynamic of the marketplace? This is a really important discussion. But in inflationary times, it's not the best idea to have a bunch of money that you're lending out, because the dollars that are paying you back are basically they're fixed. Right? So if you have, let's say you lend someone $10 million, they're going to pay you $800 or $8,000 a month for however long. The dollars that they're paying you in 10 and 15 and 30 years, those $8,000 payments are not a lot of money if inflation is eating them and has been eating them at, let's say, 8% per year.
Right.
Well, we can be on the other side of that as real estate investors. We could go borrow $10 million at today's purchase price and purchase parity. And then that $10 million debt is being eroded by 8% per year if inflation is at 8% per year. It's so much so that the bank is on the losing side of compounding interest. So there's something called the rule of 72, meaning that if inflation is at 7 or 8%, after a 10-year period, that $10 million you borrowed in today's purchase price kind of parity, in the end of the 10th year, the value of that $10 million in today's terms is now $5 million just because of inflation. So what ends up happening is that in today's market dynamics, rates, which everyone is so concerned about raising, are actually negative in real terms. If you can borrow money at 4% and inflation is at 8%, they're basically paying you to borrow money. And you're borrowing money to buy an asset, which will likely increase in part because of population growth and all these great things we like to talk about, but in part just because of inflation. You're getting both sides of the right coin. Does that all make sense before I move forward?
Yeah, absolutely.
A little bit of a rant, but I am just
Yeah.
so excited about that opportunity as an investor. We talked about my stance on whether we should do this stuff, but as someone who is participating, that's how I'm going to be participating.
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets. Just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com. Okay, awesome. Hey, I want to back up for a minute. You said early on, you said something about 2010, and I have a purpose around this. You watched something go on in 2010. What was that?
Yeah. Just basically out of nowhere, the whole, corporate media arm of finance all of a sudden was focused on one or two economic indicators that I had never heard about or focused on before. And in particular, it was the Greece bond yields.
Yeah.
And I just remember being like, man, even if I had a team of 100 Wharton grads, they would have never predicted that would be the one thing. And even if one of them had, I wouldn't have taken them seriously, right? So the point is, I can't participate in a space that would require 100 Wharton grads to uncover this unique thing. I just want to buy some recession-resistant real estate where supply and demand is going to be directly tied to the success of my opportunity. And supply and demand is very predictable.
That's what you were talking about, was that Greece event, right?
Correct.
And I remember in 2008 sitting at lunch with my CFO, and the news happened to be on, and they were carrying boxes out of Lehman Brothers by the droves. And I looked across the table at him and I said, man, we're screwed, aren't we? And he said, yeah. And I don't know that I necessarily understood the magnitude of that couple of word conversation we had, but that's where the whole world just started to unravel for your typical recession is 17 or 18 months. This thing lasted 7 or 8 years. I talked to somebody last week who said, man, I still can't get out of bed in the morning. I got hit so bad, but it happens. So, hey, I want to jump forward and I want to talk about raising capital. I know that we got a few minutes left here, and
Yeah.
The first time I ever went out to raise capital, my silly story is I put a little classified ad in the newspaper for $45. I said real estate investors wanted. That cost me $45. It ran for 4 days, and I raised $700,000 in
Whoa.
over 6 months.
That's cool.
Talk about a return on investment, right?
Totally.
But unduplicatable today, that's for sure. So how do we raise money in today's environment?
Well, I think that a lot of people, and it sounds like you did not make this mistake, but a lot of people, when they get into the world of real estate, they are told, or at least they intuit, man, I've got this great deal. I uncovered this awesome opportunity. Look at the cap rate. This is great. There's all these tailwinds in the marketplace. And man, I got a friend that only invests in stocks and they're getting 1% dividends. Man, if I show them this 6% cap rate, they're going to jump all over this thing. But the reality is, their lack of experience and lack of interest and lack of knowledge in the space. And they've heard from their random uncle that don't ever invest in real estate because you always get burned. It is far more difficult to raise money than just to find and present a great deal.
Yeah.
And in fact, that's almost nothing to do with raising money. Almost nothing, not nothing, but almost nothing. So I basically made that mistake and fell on my face during my first capital raise with a great deal, 10% cap rate. No joke, by the way, it was 2010 mobile home park business was trading at 10% cap rates. And I put it in front of a group of investors and they were just totally not interested. And it was super, super embarrassing for me. And I had told this girl that I was trying to impress, Chrissy, I'm going to raise my first $1 million, and it ended up being a total goose egg. And I had to say, oh no, like that didn't go exactly. Anyway, long story short, I did end up marrying her, which is awesome. But the point was, it was very embarrassing at the time. I took about 6 months to wipe the egg off my face and try to realize what happened. And I basically found out, I don't want to try to convince someone that this deal is good. I want to have an endless flood of people who potentially have never heard of me and try to convert them into raving fans as quickly as possible so that they stop thinking about, hey, what's your minimum investment? And can I cut it in half to try it out? And they start thinking, here's my portfolio. What percentage can I give you? And I have built an online presence, which has allowed us to do that. And then I wrote a book about this topic, and I raised more than $50 million from hundreds of investors. We also have a coaching business that helps people do this for their own deals. And it's been an awesome ride. In short, I'm a big proponent on like getting the biggest bang for your buck. And there's a lot of coaching programs. I'm not throwing rocks out there. There's a lot of coaching programs out there. Very few focus on the capital raising side of the business. And what I've found is that, man, if you can raise the money, all that other stuff is going to come to you. Everyone wants to do business with you. You don't have to spend your time talking to brokers and trying to convince them that you know what you're doing. The phone's going to be ringing if you can show them that you can make $5 million appear in 30 days. And so that's what I focused my career on doing.
So, so what's a couple of, the techniques that you teach your clients, your coaching clients on how to go raise capital?
So I basically have them, first of all, stop thinking about, hey, I'm Hunter Thompson, I'm a capital raiser, I'm going to go out to my friend, I'm going to go out to my mom, these types of things, which usually a lot of people get started like that. And I did as well. Find some uncle that you haven't talked to in forever, they give you $25,000. Now you're off to the races. I get that. That's not what I'm saying, but it's not a way to build a scalable business. And you've interviewed quite a few people, and you know that what's the one thing that everybody talks about in commercial real estate, how scalable it is. Well, you can't scale that relationship you have with your mom. It took you 40 years to build that relationship. Sure, she may give you $25,000, but you got to repeat that over and over again to grow. And so we create something called the AENC system, which is attract, educate, nurture, close, which is basically an online infrastructure capable of taking someone who's never heard of you and then turn them into like, holy crap, like what are the wire instructions, without saying like, what's your track record? What's your background? What's the market? What's the cap rate? All that stuff. As important as that stuff is to you and I, investors invest based on emotional reasons. And this is more true the more sophisticated they are. And I know that sounds counterintuitive, but if you think that the VC firms and the Harvard Business School people and the Wharton people that are up in Silicon Valley deciding on what the valuation of Uber is literally them looking at spreadsheets and then going, okay, we're going 60 million billion. It's not. It's this. Hey, Mark Cuban invested. We're in. And that's what we want to create for your business.
So it's a referral-based business.
It's more about getting through the emotional aversion, and then all of a sudden deal specifics matter very, very small. So if you can prove that you're credible, if you can prove that you have a platform, if you can prove that you're transparent, if you come off as being the leader in your particular niche, you'll find that all those due diligence questions start to just fade away. And that's the way to build a real scalable business, because then you don't have to spend all your time on a one-on-one basis. So, I mean, it takes time to build up that reputation and develop that platform, but we've kind of uncovered the playbook for how to do it in as quickly as possible. basically.
So it's interesting because, you know, I always encourage people, I say, let everybody know what you do,
Totally.
right? Um, and when I first started raising capital, I didn't have family and friends with money, not $10,000, not $25,000. So you have to go, when you're in that situation, you have to go to the outside market. And now that was long before social media and the ability to put, to get people to like you, love you, and trust you before ask them. It was like Gary Vee's book, Jab, Jab, Right Hook, right? Because give, and then the ask. And I think that that's one of the strategies I've heard that you teach that works well, and that's continually give content, continually produce content, put content out there, and let people know what you're doing and how you're doing it. I heard you mention one time that 30 to do 30 days of little go live on Facebook and let your social media network know who you are, what you're doing, and some hot topics. What are hot topics today?
Well, number one, I don't try to come up with those things. I mean, I know that's not what you're asking, but like, I think a lot of us make the mistake of thinking that we have to be the smartest person in the world to like front run everyone's thought process. And the reality is the opposite. You just need to be able to listen. So, I mean, one of the reasons I was excited to come on this was because there's a tremendous conversation talking about economic data points. And so all I need to do is hear that and engage in conversations. And like I mentioned, it's not that I'm passively doing that either. Part of my AENC system, like I mentioned, like looking behind the kimono or whatever the appropriate version of that is, this summit that we're working on, that's a result of my audience craving that type of content. So if they're asking, Hunter, is there a recession? What about this inflation stuff? What's happening? I'm not going to hide from it. I'm not going to say everything's fine, don't worry about it. I'm going to say, we're doing a summit specifically asking some thought leaders in their various niches that exact question. And then you can actually see us both uncover this at the same time. That is super, super powerful for a lot of reasons. So hopefully that answers your question.
Yeah. So yeah, it's bringing good, relevant content to the marketplace. So
constantly, not what you think you need, but what they are craving.
Right. And I think that's very fluid. It's ever changing because I think people's desire changes. And I always tell my coaching clients, I say, look, people's lives change every 30, 60, 90 days. So if you're talking to a seller and the seller's not ready to sell today, that doesn't mean in 30 days from now, he's not going to be ready to sell. His wife might come home from work tonight and say, I got transferred. We need to move, so you don't know what happens in people's lives. So that's why I follow-up is so important. Asking for referrals is incredibly important.
Love that.
Especially when you have investors that have been either gone full cycle or are at least getting some distributions and are happy. And the best time to ask for a referral is when you hand somebody a check. So
totally. Love that.
So, hey, so listen, I know we're winding down here. I got a couple bonus questions I want to ask. Any hot topics real quick that you want to touch on or anything you want to mention to anybody about, markets or raising capital?
Oh man. So, I mean, I just listened to an interview that is probably like not what you're expecting, but Mr. Beast, who is like the #1 YouTuber, arguably the #1 content creator in the world, he was just on Joe Rogan for about 3.5 hours, and I got a lot out of that. So he has about 250 million followers across all his platforms, and that's right, 250 million. And that interview really inspired me for a couple of reasons. One of which is that obsession and focus will basically overcome everything. If you have those two things and you're willing to work, you're going to see results. That's just 100% true. Now, to get to the highest of level, it's a little bit more like this. Like, I'll put it this way. So I have a business that does 7 figures a year. And the first to get to 7 figures is basically, are you willing to work hard? Like, are you willing to just put in the work? Not to say that some people that work hard don't get there, because that absolutely is the case. But it's about choosing the right vehicle, a vehicle that has scalability, the passive perspective, the depreciation, all these things that we love real estate about. If you're willing to put in the work, you can make it to 7 figures. But to increase that, to go to the next level, you have to do what Mr. Beast does, which is be willing to constantly level up and invest in your business and yourself. And sometimes it hurts to write big checks, but that's the only what you cannot go to 10 million on your own hard work. You've got to get coaches, you have to get consultants, you have to get employees, you have to invest in the things that other people are not willing to invest in, because that's the difference as you begin to grow. And so I just wanted to leave you with that, because if you go listen to that interview through that lens and think about how hard he's freaking working and how he hasn't really taken a lot of profits from his business, despite the fact that they do about $3 million of revenue a month from YouTube ads. I mean, if he's doing that, there's no reason you can't.
Hey, you said obsession and what?
Focus.
Focus. Okay.
One without the other doesn't get you super far. But if you're super, super focused and obsessed, it is amazing. You know what I mean? Like, because you can be obsessed with a bunch of different things. It will also not get you far as well.
Yeah. You know, we've talked about for years, massive action, right? Massive action causes massive results, but it has to be massive action with focus, right?
Totally.
It can't be shotgun approach. So, hey, so I like to ask a couple of questions, you know, just off the cuff. And first of all, best book you've ever read?
Dang. You know, I'll probably say the best, there's a million, but one that really changed my life was Miracle Mornings for Entrepreneurs. I'm sure a lot of you are familiar with Miracle Mornings, the brand, but the one specifically, Miracle Mornings for Entrepreneurs, there's few books that have had more of an impact on my life, just because getting up in the morning with the morning routine thing. I'd heard about it for years and hadn't implemented it. And that was the thing that made me do it. And it's been years. And I've been doing that since.
Here's what I know for sure. When something shows up in your life more than once, it's probably something you need to look at. And you're the second person today that's recommended that book. Cool. So I probably need to go read it. What is favorite tourist attraction?
Dang. You're kind of stumping me on that one.
Wow.
I will say tourist attraction. I don't know about like generally speaking, but I've kind of become super susceptible to like the nice hotel thing as like a good way to spend a vacation. I used to not want to do that, but now, you know, we're just so busy that if I can go and just sit for 10 days or 5 days for that matter, I'm like so happy. So I'm probably just going to go. Solaz Hotel in Cabo is when I spent my honeymoon at, and I'll just give them a shout out.
Wow. Nice. Probably have to check that out too now. Jeez. I might not want to ask anymore because you're making me spend money.
Yeah, at least the book is like $8.
How about best restaurant?
Okay, so if you're familiar with this one, then you're maybe going to judge me a little bit. But Sugarfish is like my favorite sushi place ever. It is a quote chain. There are multiple places, but I've had the opportunity to go to Japan and it was amazing there. But I still think Sugarfish is one of the best in the world.
Interesting. Wow. Are they here stateside?
They are in LA for sure, and also in New York. And I believe that might be it, but I'm not 100% sure.
Okay. I'm going to have to check Chicago. That's where I'm at.
Cool.
Hey, technology. What do you like technology wise? Couple of top platforms that you really like to use for your business?
I'll give you one that's so incredible, which is Mixmax. It's an integration with Gmail, and it allows you to send templatized emails. So if you find yourself doing like canned responses very often, as an example, if you have any questions, just let me know, end quote, you can hotkey those and save yourself a lot of time. So like at the end of each email, that's that kind of email, I can just push like Command K or whatever, and it'll blast that little thing out. That saves me, probably 15 minutes a day, which is, needed.
Wow, interesting. That's very cool. I haven't heard of that. So interesting. Hey, Hunter, this has been awesome. I appreciate you. You obviously you're a world of knowledge. I think I want to have you back next quarter again, or
cool.
At the end of the year, at least to get some market updates, right?
Love it. Hey, look, and
So
if there's a recession, you can, I'll have you back on. You can make fun of me, but I do think the economy, generally speaking, is healthy, and I think that the real estate investors are here to benefit.
awesome. How do people get a hold of you?
So, like I mentioned, the summit is like my number one focus right now. So just go to 100k2invest.com and you'll see this awesome. It's free. You can VIP upgrade. It's awesome, and you'll get access to everything.
Okay, awesome. Thank you. Appreciate you being here today. It's been awesome. Hey, listeners, Hunter Thompson, reach out to him, talk to him about what he's doing and what he's up to. Obviously, a world of knowledge, a bunch of information that we all need to hear, no matter the level of expertise that we might have or the level of non-expertise at this point, and you're just coming into the business. But you know what? Don't be afraid of it. Go after it. Get the knowledge you need. I always say that when I first went into the apartment business, it was like a totally different space compared to residential real estate. But you know what? Take action, right? We get this information, we get this knowledge. The next thing is take action. Remember that there's some events coming up this year. We have the multifamily summit that will be happening in October. If you are going to be looking for a space over 3 days to get a ton of information from other multifamily investors, capital raisers, property managers, other ancillary businesses within the space, that's going to be a place you're going to want to be. So watch for that information coming up here in the next few weeks. Hunter, thanks for being here today. We are here every Saturday at 10 a.m. I hope you get a chance to listen in sometime to some of the other great guests that we have, and certainly look forward to talking to you soon. Thank you.
Sounds great.